I'm Matt Bichard here at the Hay Adams in Washington, D.C. for NAREIT's 2019 CEO Forum and Advocacy Day. Joining me today is Jay Whitehurst, President and CEO of National Retail Properties. Jay, thanks so much for joining us.
Thanks, Matt. It's good to be here.
Now, early this month, National Retail Properties announced record annual results for 2018, which included a 13.8% increase in annual net earnings per common share. What do you attribute these results to?
2018 was a very good year for National Retail Properties. We designed and executed our business model to produce consistent, repetitive, mid-single digits per share results on a multi-year basis. And 2018 was another example of the execution of that plan. We produced core FFO per share growth of 5.2%, which was right in line with our target. We also increased our dividend in 2018 for the 29th consecutive year. So we're one of only 3 REITs and less than 90 public companies that have that enviable track record of annual dividend increases. When you put that together, we produced a total shareholder return for our investors that beat the REIT averages over 25 years, 20 years, 15 years, 10 years, 5 years, 3 years, and 1 year period. So the focus on consistent results on a year in and year out basis really produced some great outcomes for our shareholder investors.
And of course, part of that consistent results is the company's excellent occupancy rate, which in 2018 was at a little over 98%. What's the key to keeping occupancy so high?
Yeah, you've touched on a few real key elements of our strategy. The first is that we do business with large regional and national retailers. Our top 25 tenants operate over 1,000 units each, so these are large companies, and they are focused on e-commerce resistant businesses and customer services businesses. You see very little apparel or other retail lines of trade in our portfolio that are really struggling with e-commerce and internet disruption. Also, we focus a great deal on the quality of the real estate, good real estate locations at reasonable prices with rents that are at or below market rent. To the extent we can keep rent safe and low, our tenants are more able to succeed at those locations, and we're more able to keep the occupancy rate, to replace those tenants and keep the occupancy rate higher. When you put that together, you create a very stable income stream, and that again leads into the consistent long-term results for us.
And lastly, some of National Retail Properties' convenience store tenants include, some of the large operators, 7-Eleven, Circle K, and you've said in the past that it's a very safe and secure aspect to your portfolio. What are some of the other benefits of working with large operators, specifically in the convenience store channel?
Again, you've touched on a point that's really one of the moats around our business. But the short answer to your question about convenience stores are, those are great locations. They've got great access, great signage, great visibility. They are fungible for other uses. And so the convenience store real estate we find to be some of the safest that we can invest in. And we've built some deep relationships with large operators in that industry to be able to get good real estate and good tenants. But that's tied to our bigger strategy, which is building relationships with these strong regional and national retailers and doing repeat programmatic business. When we can do repeat business with a relationship tenant, we get a slightly better piece of real estate, we get a better lease document, and we get better lease economics. And about 80% of our dollars invested for the past few years, including 2018, has been with this portfolio of relationship retailers with whom we do repeat business. So if you put the repeat business with relationship retailers along with the stable high occupancy, stable income stream from high occupancy, and our strong low leveraged balance sheet, you really put us in a great position for 2019.
Great. Jay, thank you so much for joining us.
Pleasure being here.
For more on this and other REIT news and information, be sure to visit NAREIT's website, REIT.com.